Listening 8. Part 2. An investment is the allocation of resources, usually money, to accumulate profit or income. The fundamental idea is to use the current capital to gain a future return. Investments are a critical part of personal finance, business, and economics as they help in wealth creation and economic growth. Types of investments. 1. Stocks. These are ownership shares in a company. It means the holder of these securities is legally entitled to that portion of the corporation's assets and earnings. The profits that the holder earns from the company is called a dividend. Equities can be riskier but can potentially give a higher return. Stocks can be sold on the stock exchange/stock market or privately. Trading of stocks is regulated by the country's commitment to protecting investors by maintaining an orderly and fair security market. Companies issue stocks on the stock market to raise capital for future growth or operations. Types of stocks. Common stocks. These are stocks that give the shareholder power to cast votes at shareholder meetings. Preferred stock. Preferred stocks don't come with the ability to vote. Shareholders of these types of stocks receive dividends before common shareholders. 2. Bonds. These are loans made to corporations or governments. The selling of bonds by companies is to finance ongoing operations, new projects, and acquisitions. Governments or municipalities sell bonds to fund purposes and supplement revenue from taxes. The investor who lends money is called a debt holder. Bonds are low-risk investments than equities, making them a key component to a well-rounded investment portfolio. Types of bonds. Government bonds. These are issued by the government and are commonly known as treasuries in the USA. They fund government activities. Corporate bonds. These are issued by corporate companies to fund day-to-day operations, fund research, or finance acquisitions. Agency bonds. These are issued by government-sponsored agencies to fund education, agricultural lending programs, and mortgages. Municipal bonds. These are bonds issued by local municipalities to fund local projects. Interest earned is tax-free, making it more attractive. To answer questions below, please go and listen Part 2 first.